Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Renewable energy investments. How to profit from solar and wind in 2025. Renewable energy isn't just about going green anymore. It's a smart financial move. Solar and wind investments are surging as costs drop and demand rises, outpacing fossil fuels in many markets. If you're looking to grow your portfolio while supporting cleaner energy, this shift offers real opportunities. This guide breaks down how solar and wind investments work, their risks and rewards, and what to expect in 2025. Whether you're new to renewables or fine-tuning your strategy, we'll cover key ways to get started. The rise of renewable energy investments. The renewable energy sector isn't just growing, it's dominating. Solar and wind power are leading the charge, reshaping how we generate electricity and where investors put their money. The shift is driven by both necessity and opportunity, with countries and businesses accelerating their transition away from fossil fuels. Global shift towards renewable energy. Renewable energy adoption is skyrocketing worldwide. In 2023, renewables accounted for over 30% of global electricity generation, with solar and wind making up the majority of new capacity. The International Energy Agency projects this share will exceed 50% by 2030. Key drivers behind this surge include climate policies. Governments are setting aggressive net zero targets, pushing fossil fuels out of the energy mix. Tech advancements. Solar panels and wind turbines are more efficient and cheaper than ever. Solar costs, for example, dropped by 90% in the last decade. Corporate demand. Big businesses like Google and Amazon are signing long-term renewable energy contracts to meet sustainability goals. The trend is clear. Renewables are no longer an alternative. They're the default choice for new energy projects. Why investors are turning to solar and wind. Investors aren't just jumping on the green bandwagon. They're chasing strong returns. Here's what makes solar and wind attractive. Government incentives. Tax credits, grants, and feed-in tariffs lower upfront costs. In the U.S., the Inflation Reduction Act extended solar tax credits by 10 years. Stable cash flow. Solar and wind farms often sell power under long-term contracts, providing predictable revenue. Rising demand. As countries phase out coal and gas, renewables fill the gap. Emerging markets, especially in Asia and Africa, are scaling up installations fast. The financial case is compelling. Renewable projects now offer higher returns than many traditional energy investments, with lower long-term risk. If you're looking for growth, solar and wind shouldn't be ignored. Types of renewable energy investments. Renewable energy investing offers multiple paths, from hands-on solar installations to diversified stock portfolios. Each option suits different risk appetites and financial goals. Let's break down the three main ways to put your money into solar, wind, and other clean energy sources. Direct investments in solar and wind projects. If you want to own a piece of a renewable energy project, direct investments give you the most control and responsibility. These range from small-scale setups to massive wind farms. Rooftop solar panels. Homeowners can slash utility bills by installing panels, often with tax credits or rebates covering 30% or more of costs. Some states even pay you for excess power fed back into the grid. Community solar projects. No roof. No problem. Shared solar programs let you subscribe to a local array and receive credits on your electricity bill. Large-scale wind or solar farms. Accredited investors can buy into commercial projects through partnerships. These often yield steady returns via power purchase agreements with utilities. The upside. Direct ownership can mean higher returns and tangible environmental impact. The downside: you'll handle maintenance, permitting, and market risks firsthand. Renewable energy stocks and ETFs. Prefer the stock market. Hundreds of publicly traded companies focus on renewables. ETFs bundle them into a single investment, reducing risk. Top picks include solar stocks. Companies like First Solar or Sunrun. Wind energy plays. Think Nexter Energy, the world's largest wind producer. Clean energy ETFs. Funds like ICLN or QCLN spread risk across solar, wind, and hydrogen stocks. Stocks bounce with market trends, but long-term growth looks solid. The global wind turbine market alone could hit $100 billion by 2028. ETFs smooth out volatility. A smart pick if you're new to energy investing. Green bonds and sustainable funds. Not all renewable investments require buying equipment or stocks. Green bonds and mutual funds offer lower risk alternatives. Green bonds. Governments and companies issue these to fund eco-projects. They pay fixed interest like regular bonds, but your cash backs wind farms or solar grids. Sustainable mutual funds. Portfolios like Parnassus Core Equity blend renewable energy stocks with other ESG assets. These options won't make you rich overnight, but they're stable. Green bonds alone top $2 trillion in global issuance by 2023. Ideal for investors who want steady income with a clear conscience. Benefits of investing in renewable energy. Renewable energy investments do more than just boost your portfolio. They drive real change. Solar and wind projects cut pollution, save resources, and often deliver stronger long-term returns than fossil fuels. Here's how putting money into clean energy pays off for the planet and your wallet. Environmental impact and sustainability. Every dollar invested in solar or wind reduces reliance on coal, oil, and gas, fuels that pollute air, water, and soil. Renewables tackle climate change head-on. Lower carbon emissions. A single wind turbine can cut 5,000 tons of CO2 yearly, equivalent to planting 120,000 trees. Solar panels produce 95% less emissions than coal plants over their lifespan. Resource conservation. Unlike fossil fuels, sunlight and wind never run out. Solar farms use 90% less water than coal or nuclear plants. Ecosystem protection. Clean energy avoids the oil spills, mine collapses, and pipeline leaks tied to traditional energy. Offshore wind, for example, creates artificial reefs that support marine life. The bottom line: investing in renewables isn't just about avoiding harm, it actively repairs environmental damage. That's it for part 1. Now you've got a solid foundation. Stay tuned for part 2, where we'll dive into more details and strategies to make the most of your renewable energy investments. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.